Most traders follow setups without understanding the market. On this channel, you learn how to read structure and how to build a system that works. Next, I'm going to show you a few trades, and you'll be able to see that these trades have a considerable number of pips in profit and a high risk to reward ratio. This one is at 200 pips in profit. Press play and target is reached. Next one, here we have two trades, 90 pips and 214 pips in profit. Press play and you can see that my target is reached. This one is 200 pips in profit. Press play, target reach. This one is a trade with with more than 300 pips in profit. Press play, target reach. This trade have 165 pips in profit. Press play, target reach. But sometimes you have trades like that. So even if you have the trade in the right direction, your target will not be hit. But because we are using a system and a trade management system, will manage to take profit on these trades. But remember, this is almost 400 pips trade, okay? So even if you take partial profit, it's still a very good trade. Again, we have the good direction, but this trade was not very good. But somehow we managed to re-enter in this trade. But actually, this was only a break even. But the conclusion is that this trade was not a good setup. Again, we can see that we have the correct direction, and this one was a direct stop loss, and that happened because this is trading. And this trade, even if you have a good direction at first, was not best trade, but we still managed to make profit because we are using trade management system. But don't worry, because we are teaching you how to take very high probability setups and how to use a trade management system that will make you consistent. My strategy is a simplified version of market structure, but also I use an indicator, and this is TMA, triangular moving average. Next, we'll go with the first lesson. The first lesson is introduction in market structure. So you have to know that there are just two types of moves. You can see bullish moves, uptrend. So you have higher high and higher low. You can see right here, higher high, higher low, higher high, higher low. And bearish moves, downtrend, lower high, lower low, lower high, lower low, lower high, lower low. And also there are a consolidation move, but actually that doesn't exist and that doesn't make any sense, because even in a consolidation area you'll find structure. So you have to remember that there are just two types of move, bearish and bullish. In market structures, these highs or these lows are called liquidity point or structure point. Structure point is equal with a higher low or a lower high, must hold for trend to continue, and liquidity point, higher high and lower low, must be taken for trend to continue. That's just a name, so actually you don't have to overcomplicate yourself with these things, just to know about it. Here we have an example, and we can see a liquidity point and a structure point. So as you can see, this structure point have to hold for trend to continue. And as you can see, that happened. Point, structure point, liquidity point, and right now price make a shift in structure right here. So this structure point didn't hold. That means a possible reversal. And next we can see that this liquidity point left behind a structure point, and because of that we expect that our move right now is bearish. So we can see another structure point followed by new break of structure right here. Also, there are two types of structure. You can see a higher structure, a major structure, and a substructure. In this case, the black structure is a major structure, and the blue structure is a substructure, but is a substructure for the black one. That's very important. But in this case, the blue structure is a major structure, but is a major structure for the red structure, which is a substructure. And every structure can contain another structure inside it. So that's the main point. The second point is that a higher time frame structure will always be dominant over a lower time frame structure. But to say more correctly is that a major structure is always dominant than a substructure. So the structure is the same regardless of the height of the time frame. And the time frame help us identify a structure more clearly. And here you can see the difference. So no matter actually the time frame you use, because the structure is the same. As you can see, here is an example of a week time frame. This is a week time frame chart, but the structure is same. This is a day time frame chart, but the structure is same. And this is a 4-hour time frame chart, but the structure is same. With more details. That's everything for today. If you like my content, just hit that like and subscribe, and see you next video with the next lesson. We'll take things step by step.